in America. Their sympathies lie with the Palestinian people. The president has been, over the course of the past nearly 2 weeks, making the case, and this is something he is deeply affected by, about the right for Israel to defend itself and how it is in the national security interests of the United States to make sure they are supporting Israel in their right to defend itself. This is something the president really holds dear since he was a child. He talked about in a number of these speeches the fact that he would bring his children to view concentration camps. This is something that he personally is affected by, and he wanted to make that case to the American people yesterday.
Anne-Marie, what is the task this weekend? I mean, not so much the president, but the administration. Do they speak to the Saudis? Who's the number one phone call to?
Well, I think they're talking to everyone at this moment. What I think the administration has to deal with right now is the present danger to our men and women in Iraq, in Syria, on air bases, where General Pat Ryder yesterday at the Pentagon talked about that they are coming under increased fire. There's a lot more uptick in drone activity, as well as yesterday, the destroyer in the Red Sea intercepted missiles and drones that were likely headed towards Israel from the Houthis. So this is going to be front and center for this administration and the Pentagon as we go into the weekend.
Anne-Marie, you nailed it. The president had a purpose yesterday evening, so let's talk about that purpose, the follow-through, a formal request, $100 billion in resources to help Ukraine, to help Israel, and other issues on the agenda as well. Anne-Marie, how does that happen without a speaker in the House? How's this going to work through the next few days and weeks?
Well, it's a great question, Jonathan. If you ask individuals who actually drafted the language of what a pro temp speaker does post 9/11, this was drafted for continuity of government, they will say that actually the pro temp speaker has the powers in a time to put something on the floor, especially if it has to do with an emergency situation. But the Republican Party, Jonathan, is chaotic right now, and we just don't know how they want to proceed yet. Jim Jordan is saying he's going to go to the floor for a third vote. He's going to be speaking at 8 a.m. Potentially we'll get a little bit of an update from him on whether or not he thinks he has a better chance. Likely it doesn't look like he has those votes. And we're once again Groundhog Day in Washington, D.C., and it's paralysis, really, on the House of Representatives. So it makes the president's request much more difficult, but by and large, you do see bipartisan support when it comes to supporting Israel. The president is casting a wide net here. He's including partners in the Indo-Pacific. He didn't mention China by name last night, but clearly he was talking about China and Taiwan. And also there's going to be money for the southern border. So there's something there for Democrats and Republicans alike. So when there is a speaker, or potentially they give a little bit more of a nudge to Patrick McHenry, the pro temp right now, to potentially put this on the floor, there will be the votes.
And I'm sure President Biden doesn't mind that much from at least a visual perspective that there is disarray in the Republican Party. I am wondering, though, with Jim Jordan, why is he running again if it is very unclear whether he has the votes?
Well, this is an individual who fiercely does not like to lose. It's almost ingrained in him that he does not like to lose. And you know, no one really, I think, at this moment is a clear win for the Republican Party to get to 217. One Republican I heard, Mr. Joyce, say no one in this party can even agree on the time of the day. So you can see how fractured the party is right now, and potentially Congressman Jordan just thinks, you know, a third time is a charm. Maybe I could jawbone some of these individuals down to see my vision. The issue is this is actually starting to get a little bit violent in the rhetoric. There's a number of congressmen, Don Bacon, he's come out saying his wife has gotten threatening text messages. I listened to a voicemail that CNN put out that was very disturbing. I mean, incredibly disturbing and chilling of what potentially some of these allies or individuals in Jordan's office are saying to congressmen and women and their families who oppose Jim Jordan. I'm not sure if that bullying is going to work. We'll see today at 10 a.m.
There have been a number of congressmen have come out and said it's actually pushing them in the opposite direction. Anne-Marie, does this make it more or less likely that there'll be some sort of Speaker of the House supported by both parties, a sort of bipartisan type of character?
I think the Republicans are going to exhaust all their measures, and then potentially you're going to see some wheeling and dealing on the Democratic side to get someone in place. Yesterday, we had thought that they were going to really try to expand the powers of Patrick McHenry. But when the Republicans came out of that conference early in the morning, it was very clear that majority of the Republican Party did not want to go on that route. They wanted to make sure that they were able to elect a speaker. At this time, it's really unclear the path forward, but there is that potential that we could see almost a power sharing within the House of Representatives if there's a more moderate centrist Republican that goes for the speakerships and gets Democrat votes. The issue is, in about 1 year's time, that individual will be up for re-election, and the hard right of the Republican Party is going to want to primary that person.
MH, thank you. Anne-Marie down in Washington, D.C. on the latest regarding the President's address to the nation yesterday evening. Tom, $100 billion. And within the $100 billion, you're talking about multiple causes.
Yeah,
the two most prominent ones.
Precisely.
Israel and Ukraine. If you can get the support for Israel and you have that consensus in Washington, do you have the same consensus on Ukraine at the moment, particularly from the Republican side? I don't think you do.
I think it's a movable feast.
I'm not sure how easy this will be.
This goes to the polling, including the Bloomberg poll of a few days ago showing Mr. Trump doing better than good in some key states as well. What's after the first 100? 50? Do you do a harmonic spend, or do you go to 200?
Well, but and also just to pair this idea with the fact that there is no Speaker of the House. How political is the timing of this? Yes, they need the aid. They're not going to get it for a long period of time based on some of the dysfunction down in Washington, D.C. So how much is this aimed at pressuring some of the bipartisan members who do support both causes?
Yeah.
And that, to me, is part of what I think we have to understand with the timing, too.
On the fringes of either party, you know you're going to get pushback to Ukraine aid from the Republican side. You'll get pushback to the Israeli aid as well from the Democratic side on the fringe of that party as well. It's really, really difficult right now.
I would suggest the British phrase, they will be overcome by events. Let's try to get to Monday.
We have been, haven't we, over the last couple of weeks, in a big way. From New York City, up next, Deborah Cunningham of Federated Hermes on this market. What a bond market move so far this week. Your yield, 493.50. From New York, this is Bloomberg.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
We are on the longest daily losing streak in about a month on the S&P 500. 3 days of declines on the Nasdaq. Your price action looks like this. We're down another 0.2%. Let's see if we make it day 4. On the Nasdaq, we're down 0.25%. We have to confront developments in the bond market. 2-year, 10-year, 30-year, cycle highs. Through the week, 493.50 on a 10-year. We're down about 5 basis points on the day. Within a basis point, within just 1 basis point of 5% a little bit earlier on a 10-year maturity, 4.99. Your 30-year, Lisa, even with a 4 basis point move lower, still comfortably above 5% this morning, kind of speaking to the move we've seen higher in yield this week.
We're at levels that we hadn't really gamed out, that were kind of the worst case scenarios. The Bill Dudleys would come out and they would say something like, yeah, yields could get to this point, and everyone would write these, sort of dramatic headlines that everyone would then shrug off and say, that's not plausible. Here we are, and I think the biggest surprise is not that rates have gotten here, but that it's that you have not seen a commensurate sell-off in risk assets to really pair that. That basically this has come with strength and ongoing strength and resilience that no one really imagined.
Data's still good, right?
Exactly.
You guys are dead on here. Torsten Slok moments ago puts out a deck from Apollo, and he says it's simple. The default cycle started. And that's something, Lisa, you've been following here. And the answer is garbage like auto delinquencies and the rest of it has really gotten ugly in the last month or two.
But we're still not going to 2007 levels, 2008 levels.
Are we, though? That's the question in terms of default. I don't know. I really don't know what to do with it. I was walking down the corridor at Marrakesh, and there's Bill Dudley walking at me.
How Bill was there?
Can we stop for a moment and say, sometimes you make the right call, and it's not because you got the reason why. He's genius of the year. I mean, it's amazing what Dudley's done.
I always reflect on a conference that I did for Bloomberg, actually, back in the summer of 2021. I had 2 panelists. One was Bill, the other was Mohammed. And they were both talking about the prospect that maybe inflation isn't transitory. Mohammed was really pushing the idea that there's some real two-way risk here we need to appreciate and we're not. This could well be the real deal, an inflationary problem that this Fed has to respond to aggressively. Fed's still doing QE. Got to remember the backdrop here. Rates are still zero, Fed's still doing QE. Continue doing QE for like the next 9 months. Ridiculous. And then Bill comes out and he talks about how far Fed funds might have to go.
Yeah.
And he talks up a 5 handle. And I'm sitting there listening, Tom. We're still doing it virtually because it's still post-pandemic. That's how far. This is how far back this was.
Yeah.
Sitting there thinking, Bramo, 5%, no chance.
And why not?
Something's going to break.
Exactly. And that you're going to see this rash of defaults that Slok says is coming, but it's just sort of on the margins. It hasn't become an existential risk.
That's the bond market story. Let's get to the commodity market story right now. Crude, Brent, WTI pushing higher through last week, again this week as well, up by 1.4% on the session. $90.60 WTI, Brent crude $93 and about 60 cents. Under surveillance this morning, the US sending more forces to the Middle East, including fighter jets, as tensions flare in the Israel-Hamas war. Minor injuries were reported after US bases in Syria and Iraq were targeted by drones yesterday. A US destroyer also intercepted 3 missiles launched from Houthi militants in Yemen, believed to be headed in the direction of Israel. The risk here, Lisa, I think we all understand it and appreciate it now. The risk is that this becomes a broader conflict and maybe even, perhaps, and we all fear it and hope it doesn't happen, the US gets pulled in.
The frantic diplomacy that we have seen really highlights that. I thought it was interesting that Rishi Sunak met with the Saudi Arabian leaders in a way that the U.S. president could not, because all of those meetings had to be canceled after the explosion at the hospital. This, to me, highlights how concerned everybody is about a broader conflagration, and yet nobody has understood how to put the genie back in the bottle, especially given all the anger.
And if you thought it would deliver some kind of sense of urgency in Washington, the answer to that is no. Congressman Jim Jordan continuing his bid to become the next Speaker of the House. Jordan expecting to hold a news conference at the top of the hour with a third vote set for 10 a.m. A measure to make Congressman Patrick McHenry the temporary Speaker, Tom, has failed.
Yeah, I would watch Mr. Jeffries into the weekend. I think the gentleman from the Democratic Party, he is from New York City, and Mr. Jeffries, Congressman Jeffries, is going to be front and center here. If you go, let's assume it's a debacle, pretty predictable right now. Okay, so it's a debacle. What do you do to get to Monday or the Sunday talk shows? And the answer is listen to the Democrats.
A lot of stories off the radar at the moment. There were really like the story on the radar only a few weeks ago, including this one. General Motors and the United Auto Workers nearing a tentative deal to end the labour strike. Our reporting here at Bloomberg saying the two sides are moving closer, but still having disputes over pay and pensions. UAW President Sean Fain expected to give another one of those updates, Lisa, a little bit later this morning. We'll get that at 10 a.m.
I take your point that it's off the radar. It's sort of interesting that it is, given how long it's gone on and how much this potentially could reduce the supply of cars. And what does that do? Increase prices at a time when people are worried about inflation. To me, this really does highlight how all of these micro factors continue to go on as people worry about sort of these exogenous risks, and are the reasons why people still see strength, ongoing inflation, and some of these other kinds of wage pressures that this really represents.
Clearly, Tom, UAW feels like they've still got leverage, which speaks to that jobless claims number we got yesterday. What was it, sub 200?
Yep.
Yeah,
sub 200 on claims.
Yeah, stunning.
Amazing.
It was really stunning. Continuing claims was what I guess they call quiescent. What I want to know is they got to get back to work because they got to compete with the Cybertruck.
Which is out in November, delivered, delivery's coming out.
I think, they got to get back to that. Right now, we are going to give you a terrific brief, as we did before, on this bond debacle. She has lived it. Deborah Cunningham joins us, Global Liquidity Markets CIO at a massive bond house, Federated Hermes, with all of their experience at money market funds. Deborah, I'm not going to mince words. All my radar's up, and my lesson on radar is to go to trust in liquidity. Into the weekend, is there trust in the system? Is there liquidity within the system?
There are both at this point, Tom. I think, as Lisa was mentioning, this economy has a huge mosaic of factors that are inputs to what's happening in the overall market. What the strength in the economy is, what the yield curves are doing, currencies, all of those things. And ultimately, the liquidity markets and liquidity in the broader markets seems to still be resilient and have strength going into the weekend.
Deborah, we were talking earlier in the show, at what point do we reach a tipping point where all of the investors who have just hoarded cash in 5% yielding funds start to say, you know what, we actually are worried about locking in some of the repricing risk on the longer end of the curve. Have you started to see that on the margins?
Lisa, we challenge ourselves with that every single day. Should we get longer? Should we go into other products? Should our advice to clients be going into and locking in some of these longer yields? And we think the beginning of that process has started to occur. Certainly, we've started to see some pickup from a bond flow perspective, but not en masse yet. And I think that's because we finally have a bond market, and we saw the statistics that are 10-year, 30-year, 2-year types of yields that are above or approaching 5%. We finally have a bond market that is reconciled with the fact that the Fed speak out there for the last year, higher for longer, is truthful. It's what's happening. Don't expect something different.
But Deborah, what do you make of the fact that we're not seeing some sort of race toward 10-year, 30-year bonds at 5% yields at a time of great geopolitical concern, at a time where people are looking for haven trades to protect against possible unrest? Does that send a pretty powerful and deeper signal to you?
I think it sends the signal that we're still not sure if inflation is reined in to the point where the Fed is comfortable in maintaining a yield that, is for an extended period of time without going higher. Certainly, Chair Powell and other Fed speak is leaning in that direction. But we don't see, I don't think that what we're seeing from an inflationary perspective is 100% confirming of that. I mean, you were mentioning the auto strikes. That can be, a negative from an inflationary perspective, both from a wage inflation as well as from a vehicle inflation. We don't know how that is going to impact us. You have issues from, the conflict in the Middle East. What does that do from an oil inflationary and an energy perspective? There are so many unknowns out there from an inflationary standpoint that I think people will continue to be tentative until some of the fog in that picture starts to clear.
Deborah, Friday, as you well know, in federated land means do Frank Fabozzi, the giant of teaching us about fixed income dynamics. Let's do it right now. The conceit into the end of the year is mark to market. We're not mark to market, and we'll just hold it out to maturity. Baloney. It's just baloney. If I've got a 10-year piece, how far out is my break point where things fall apart, where the idea, the conceit of holding it forever falls to pieces?
Well, it really depends on, what the coupon is on that 10-year piece. If it's a 5% coupon that you just bought recently or a 4.5, it's probably not that lengthy of a holding period. If it's something you bought a year or two ago and has, yields that are several hundred basis points below
Right.
that, you're not breaking even at any point in the near term. I think from a bond investor perspective, it's hard to get off yield. Yield has been what has ruled the roost in bond land forever. But total return is very, very impactful and needs to be considered as well.
Thank you. This is incredibly important. So let's go again to Frank Fabozzi and the idea that we are switching from a yield mindset to a price mindset. How will that affect institutional bond buy side?
I think what you're going to see is resistance to that. But as the resistance starts to fade, you'll see people lumping back in to the bond market, because what the downside risk is with yields above 5% is much less than the downside risks when yields were at 3%. So coupon clipping from that part of the total return should help get you through some of the price risk that you still may experience. All in all, though, you have to have a time frame that's longer than 3 to 6 months. You need to be thinking about something that's, more in years for that type of thought process.
Deborah, thank you. Deborah Cunningham there at Federated Hermes. Tom, it takes time to adapt and adjust, to borrow a phrase from a wise man in a bow tie, to what has taken place over the last couple of years.
I can tell you, folks, I went through a couple bond debacles way back that were kid stuff compared to this. You just heard a massive jaded pro there, and the gentleman from BlackRock was Jean Bovin moments ago.
Yeah.
His Bank of England experience. Folks, you're getting a snapshot here. Did you see how Deborah Cunningham was not stammering, but choosing her words carefully?
Locked in.
Because this shift from yield to price is really rare in the last 20 years.
There's one security that I keep bringing up on the Bloomberg terminal, and it matures in 2050.
Menu?
It's a 30-year gilt that was issued in the summer of 2020.
You taught me that, yeah.
It's trading in the 30s.
Yeah.
Just to get your head around that, it's trading in the 30s. It
Yeah.
had a coupon, Tom, just looking at the numbers here, 0.625.
We had 2 interviews just in the last 2 hours that, their time frame is when the Tottenham wins the Premier League. That's all there is to it.
Which is probably when that bond matures, Tom, in 2050. If you're just joining us, welcome to the program. Hello, Daniel Levy. Your equity market negative by 0.3%.
Somebody tweeted out today, let's try to take a moment here of joy. They went back and looked at our Christian Horner interview.
Oh, right.
And they're in Austin.
What made them do that?
I don't know. They're in Austin this weekend.
They are, yeah. I saw that.
Explain to our American audience here.
Well, maybe you can. You're the big fan now.
No, I don't have a clue, but it's the same. It's a track you don't like. You don't like these modern Miami.
I don't like the newer
Austin
tracks. I don't like Miami. I'll sort of remain on. I'll work out what I think about Vegas. All right. I'm trying to bite my tongue a little bit here. I don't like any of it. I really don't. I like the traditional tracks with a lot of heritage. I prefer that.
Yeah.
So I like sort of your Monacos, Hungary, Spa, Belgium, Monza, Italy, Silverstone, of course, in the UK. That's my preference.
That's about
reserve judgment.
It's all about all the light chat we can have. The events here this week have been exhausting. We've got to go right back to the bond market and, you know, yen at 150 and the rest of it.
Which almost makes me need a vacation to some of those places, which sounds like a better vacation than some
Wouldn't
other
that be
places.
amazing? Jerry Halliwell does that now, right?
Goes around
because she's married to Christian Horner, so just goes around to, you know, do the
tour.
If I won the lottery, without doubt, I would do the tour.
And
that would be me for the year.
Your co-host with you, so we could do the show there.
No, I'd retire, phone in, see what you're up to, that kind of thing, from Monaco. That'd work.
It'd work.
Like that. Then all of a sudden,
are you going to Vegas?
I'd love these.
Are
new
you going to
tracks,
Vegas?
How many lotto tickets have you bought recently?
I don't gamble, Bramo. I'm not a gambler. No gambling for me.
But if you did.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yeah.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Slice through the noise.
Forget the noise, ignore the noise.
Is this just going to be noise?
Just noise.
It's noise versus signal.
Now, more to the point.
What is the lesson or the observation?
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions.
When America experienced the hell of 9/11, we felt enraged as well. While we sought and got justice, we made mistakes. So I caution the government of Israel not to be blinded by rage.
Not the first time we've heard that from this president this week. President Joe Biden, in an address to the nation, trying to find a bit of balance there with those comments. From New York City, welcome to the program. On the S&P 500, pulling back by 0.25%. Yields lower by 4 basis points, 494.35 on a 10-year. Crude rallying all week, up for a second consecutive week, up by 1.4% and back in the 90s. On WTI, Tom, $90.60.
And the oil lifting up here. It'll be interesting to see off news flow where we'll be. And I'm not, after talking to Oliver Cook, John, I'm not really sure I understand the news flow into the weekend in Israel. I think it is completely unknown.
I keep going back to something I've said, Tom, a few times this week. Yeah. Going into last weekend, seemingly on the brink of a full ground invasion. Feels like something's changed in the last few days.
Something's changed. I agree. Lisa,
had this week of very intense diplomacy, Bramo, and we've had leader after leader visiting Israel. And it just feels like that timeline's been pushed out somewhat.
And there's a question around what the objectives are and a greater focus on what things will look like in Gaza after this whole explosion of tensions really ends. There's also an issue of how much we are dragging other regions into the conflict and how that's becoming a real issue and a real threat.
We're going to begin now with a really delicate conversation with the gentlelady from Michigan. Haley Stevens is a Democrat from Michigan. Of course, it's a Michigan of Dingell, Debbie Dingell, and the rest. but it's also a Michigan that shows the immigrant demographic and makeup of America. Haley, good morning. Thank you so much for being with us. As you know, the Arab community coming off of 1947, 1948 in Michigan is Dearborn, Michigan. You don't represent that, but you've got to live with a heterogeneous Michigan right now. What is the support for the president in a fractious Michigan?
Well, I would be able to tell you more if I wasn't trapped in Washington waiting to vote for a speaker. But look, I think people are heartbroken about what has taken place in the Middle East. They are heartbroken over the terrorist attack on Israel. Certainly, our Muslim community is feeling, as the president said, the unfortunate reminders of what took place, the targeted violence that took place towards their community in the wake of 9/11. And this is a moment, just as our president did last night, to show compassion, to really talk about who we are as Americans, that we are a welcoming place of diversity. And we do celebrate our Jewish community in Michigan, who is hurting right now, and tell them to be proud of who they are. And we celebrate and recognize our Arab and Muslim community in Michigan and tell them to be proud of who they are. All are welcome in this country.
The shift here, Haley, in Michigan is a perfect crucible for this. It's from John Dingell and Debbie Dingell, in the support of the Democratic Party for Israel, which, as our Anne-Marie Horton says, has ebbed away. And that tension outside Detroit is an image, a small piece of the American debate right now. How will you represent that debate in the House if and when you finally get a House that's organized?
Well, I've been very clear about standing by democracy. And what we heard from the president last night, needing to support Ukraine, needing to support Israel. Certainly Armenia is on our minds as well, with autocratic attacks coming from Azerbaijan. I sit on the Select Committee on Competitiveness with the Chinese Communist Party. It is very clear to me that this marker in time is about democracy versus autocracy. I am not calling for war, but I am saying that free markets, capital markets, and open democratic societies need to continue to lead the free world. And if we do not stand by our allies, if we do not stand by the only democracy in the Middle East and find a path to peace, that is where we need to go. And that is where I'm going to vote, that is where I'm going to support, and I am going to continue to be there at the same time for all of my constituents. I have been very clear about my views on supporting democracy, on supporting Israel, as well as Ukraine at this time.
Do you think that your fellow Congresswoman from Michigan, Rashida Tlaib, is showing that compassion and helping the cause?
I'm not here to talk about any of my other colleagues. You're asking me about my position and where I plan to vote as a member of Congress. Our Michigan delegation is small, it is mighty, and we work together on a multitude of issues. I don't agree with all of my colleagues on their issues, but I will say that I am planning to support the president's call for support for Ukraine and support for Israel. I was just in Israel in August. I was at Kfar Aza. I was looking out on the Gaza Strip. I was hearing about how 20,000 people come in daily to work in Israel, how all people want is peace. And we do need to find those pathways. We've got a modern president in Joe Biden with a vision for the future and a vision for a path to supporting our allies and finding peace. And that is where I'm going to be focused.
A lot of people are wondering how quickly Congress can act because of some of the dysfunction, the fact that there isn't a speaker right now. A question of whether Patrick McHenry could potentially get bipartisan votes to be at the helm. Would you vote for Patrick McHenry?
I am going to vote along the lines of how we get out of this in a bipartisan way. Right now, I'm on the Problem Solvers Caucus. You know, certainly our discussions are private at this time. I think empowering as Hakeem Jeffries put forward yesterday, and we thought that the Republicans were with us, a temporary speaker pro tem to get us out of this mess. I will say the day that Kevin McCarthy resigned as speaker, I said that we might be in a national security crisis, and this is a threat to our country. And then on Saturday, we woke up to the devastating news of the terrorist attack on Israel. We are feeling the tensions back at home. We are feeling the worry. The House cannot be shut down. We're in over 2 weeks of this mess right now. I want to get out of it. We cannot see our government shut down. The funding has got a deadline less than a month from now. That would obviously be catastrophic. So whatever it takes. Mr. Jordan appears stubborn and intent on moving forward when he clearly doesn't have the support, bipartisan support, or the support that he needs within his caucus. And what we've seen this entire term, this has been going on since way earlier than Kevin McCarthy's being pushed out as Speaker. Republicans are not in agreement with each other. Republicans are blocking Republicans from passing Republican legislation. We are in shared government. We've got a Democrat as President of the United States who's known for being bipartisan. We've got a small majority in the Senate.
Yeah.
We've got Chuck Schumer who's doing the work. We got to get our acts together. The adults need a lead right now.
This sounds like a campaign pitch. Congresswoman, how are you going to work in a bipartisan manner if you're unwilling to address the division in your own party?
I don't know about what division you're talking
Well,
about.
let me highlight it right now. I'll give you the quote. Rashida Tlaib, Israel just bombed the Baptist hospital, killing 500 Palestinians just like that. Tweet's still up. Can read it. It's different to what you think, isn't it?
So we're talking about the Speaker, and we're talking about 212 people are voting for Hakeem
You're
Jeffries,
talking about that, not what I'm talking about. I just referenced the quote. You said you're willing to address the division in your party. Let's do it right now. Why is that tweet still up?
That is one voice. I do not control another member of Congress. I have been very clear about where I stand. We can see the votes time and time again. 400 plus members in this very body voting to support Israel, voting to support the Iron Dome. Those are my positions. I could sit here and try and argue with Jim Jordan, argue with Matt Gaetz, argue with the people who have different viewpoints that represent a very small minority. Look, the intelligence is out there about what happened with the hospital. I'm listening to Israel. I'm listening to the U.S.
And
intelligence.
your Democratic
and
colleague
so is my Democratic leader, my
your
friend.
Democratic
so
colleague
is my Democratic leader.
isn't listening to it. Based on that, she isn't. And you've got nothing to say about it, which is pretty amazing.
I just said my position, sir. I just
Have you spoken to your Democratic colleague?
We have all spoken, and our leadership has spoken, and our president spoke last night. I really don't understand what we're debating here.
Haley Stevens, thanks for being with us. Congresswoman from Michigan. TK.
This is the debate, and to the congresswoman's credit, there is a tradition that you don't criticize other congresspeople. That is an ironclad agreement across a party that goes back well in excess of 200 years. With that said, it is Michigan is a crucible of these demographics.
Like from New York City, your equity market is slightly negative. We're down 0.1% on the S&P 500. From New York, this is Bloomberg.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others.
Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
I think this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
People are looking for safety alternatives.
To me, look, bonds now yield something. They offer real value.
The further that yields rise, the greater the chance that a slowdown is going to be even deeper.
Consumer spending is starting to soften, but it's not broad enough yet that it's falling off a cliff.
We could keep up a sustainable pace that looks a lot like, if not a little better, than where we were before the pandemic.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television. An exhausting week, an extraordinary Friday. We welcome all of you on economics, finance, investment, on international relations in a fractured Eastern Mediterranean. Lisa, we're all exhausted. I think we've got to start with the bond market. It's been a huge theme through the morning. It's just simple. Yields stay up, sustained, and prices down.
Somehow the idea of post-2007 highs has lost its power. It's lost its punch. We've gotten sort of benumbed to this idea of this immeasurable climb higher. The question now is, how high can it go? Do we basically have this sudden skepticism that we can get back to anything close to what we used to know? This idea that, yes, you can leg into longer-term bonds because at some point you'll like the idea of 5%
The question to do with your diminished wealth, if you're not in the triple leveraged all cash fund, we've got an important guest coming up here on multi-asset translated linkage between equities and bonds right now. I want to get to the international in a minute, but we've been completely devoid this morning, Lisa, on the equity markets, and there's American Express is some form of clarion signal that no one's paying attention to.
Record revenues. We're talking about record profits, people coming and paying for the luxury of whether it's going to a Sky Club or whether it's the other perks that American Express offers. But what this highlights is just, again, that the well-heeled individuals are not hurting. And you can see that again and again. American Express shares not doing much in pre-market trading. But these numbers are really stunning, given how much you already had baked into these shares. Third quarter earnings per share, $3.30 versus the estimate of $2.95.
That's a simple look back. I'm going to look forward and say double-digit plan there of, well, double-digit. I'm overdoing it. 10% was a modeled plan, but 7% core growth. And these are numbers that come from a sprightly economy. And that's, again, within this horrific bond news flow, the horrific news that we see out of the Eastern Mediterranean. I'm sorry, the American GDP statistic is solid.
Here's where things get really kind of rather confusing, especially in the perma-crisis world that Mohammed Ali-Aaron and others have written about. People are expecting defaults to pick up. Suddenly, the whole world collapses. You're seeing, actually, the bad loan charge-offs in American Express increasing, going beyond what people previously expected. They're just making so much money on the other side that they offset that. And this highlights where we are. Yes, there are people struggling. There are people not paying their bills. There are companies that are defaulting. But that is not torpedoing the broader economy in the way that it has traditionally, at least in the 2007-2008 cycle.
To channel Batman's friend Marty Fritzen, holy Marty Fritzen, and the answer is the default season is clicked in here. Torsten Slok at Apollo out with a deck this morning. We're not going to quote it now. We got to get out. My bow tie. I can't do anything with my bow tie today. On radio, it looks terrible. And the answer is Slok. A default cycle has started. Bramo, discuss.
Well, it has started, but how far will it go? He writes, a default cycle has started with bankruptcy filings rising, and default rates will continue to rise over the coming quarters, impacting, in particular, middle market companies. This goes to something you've talked about extensively, Tom. How much does the lower tier of players, whether it's smaller businesses or whether it's less wealthy households, are going to have a completely different reality than the rest of America? And how much do we see that that divergence widen out?
Lots of narratives away from the market and away from the Eastern Mediterranean. And Mr. Jordan of Ohio is speaking right now with flags assembled behind him. And it's very simple. This is, Lisa, help me here because I can't keep count. I'm not like Horton. Horton just memorizes his stuff.
It's his third
vote today?
Yes, it's his third vote. And he said that originally he waffled. He said he'd throw his support behind Patrick McHenry. And then, no, he's not going to give up. This amid a lot of controversy and accusations of threatening voicemails and texts to the other Republican Congress members.
Joe Matthew and Amory Horton following this, I'm sure, a terrific sum tonight on a 3-hour version of Balance of Power. I think that's
I'm
what
sure
they're
they'll be
going
very happy that you just assigned them.
We're going to tackle the data check right now. Oil elevated off of, I'm going to be certain, missile strikes from Yemen, moving some vicinity north towards Israel or other points. I got Brent crude was giving me some 94 love. The answer is we've come back to a 93 handle, 93.43. Bond market. It's real simple. I'll just say this, Lisa. The real yield is where I never imagined it. I had a 250 walking in the door this morning. It's 247 right now. I have never framed a 247 modern 10-year real yield.
I am so glad you brought this up. This is the inflation-adjusted yield. And this speaks to what Jay Powell said yesterday with our own David Weston when he came out and said, what's driving longer-term yields higher? He didn't really give you any kind of conclusive answer, but he did say it doesn't seem to be driven by rising inflation expectations. It is risen by something else, rising deficits, rising uncertainty about the demand bid at a time when you have places in Japan and China pulling back.
Global Wall Street watches us, listens to us for the things below the narrative. Here's a tea leaf. Credit Suisse, and no, it's not the UBS rationalizations and layoffs. The major fund, real estate fund of Credit Suisse has dropped. They've repriced it negative. I don't think it drops. I made that. It's my fault, folks. Not accurate. They've repriced it. It's like a Tesla price cut, down 9%.
Price is lower, yet not necessarily forced selling, and that I think is going to be the key. When do we see forced selling and realization of the losses at a time when people are seeing sort of paper losses mount?
The tension here, the VIX 20.91. With experience and a wonderful clarity of note at Neuberger Berman, Eric Knudsen joins this morning. Multi-asset class CIO. That means he's been there longer than 10 years, and he joins us again amid this tumult. What does the bond debacle mean, Eric, for stocks?
Well, good morning, and it's always a pleasure to join you, especially when I'm being followed by a quote of both Batman and Torsten Slok in the same sentence. So, I mean, I think first and foremost, this is a time for humility in multi-asset investing, and there is such a divergence between short-term economic information, including earnings, which are coming in quite, nicely, short-term GDP growth expectations, unemployment, consumer behavior, as you said, as reflected in the Amex earnings, with much higher interest rates, much higher, stickier inflation, and the crises around the world and in Washington, et cetera. And what this highlights is a time where we don't want to make big beta bets in terms of big market exposure moves, but we want to be what we call long the strong, focused on quality within equities, within fixed income, in private markets, real estate, where there are some now interesting opportunities as real estate gets repriced, as you see. And that's where we're seeing interesting opportunities right now.
Eric, there was an interesting question raised earlier this week about how much of these repriced assets are actually for sale. When you go out and you try to buy things at a discount, can you find them?
There's still, a pretty good-sized bid-ask gap in private markets when you're looking to engage in this activity. That said, the pricing where markets are clearing when things sell are becoming more and more interesting. Average secondary pricing in private equity markets is 90 cents on the dollar. Real estate even more attractive. And for our clients who can lock up capital in longer term investments, we think the ability to provide liquidity right now, whether it's in private credit or secondaries, where you can solve problems for distressed investors, not distressed assets, is one of the interesting opportunities right now in this quite, confusing overall environment.
This is an interesting trend that I've heard a lot about. Basically, the new distressed debt bet is not to wait for a company files for bankruptcy. It's to go to the CFO and say, you got to refinance in 2 years, and you're going to have a problem on your hand if rates are at this level. So let's figure out how to extend your maturities, add some certain protections, and you can give us secured assets and change around some of the structures. How much is that extending this cycle far beyond what people expected in terms of the effects of monetary policy?
It's one of the aspects. As banks and traditional providers of liquidity have pulled back, and you've seen the SLUs and other information indicating that bank standards are tightening, lending activity is down. A lot of that is moving to the private markets, where private markets investors don't have to mark to market on as regularly. They can take longer term time horizons, and there's a lot of additional capital that can help kind of buffer some of these impacts. I think the other thing that's going on is if you give corporate management a year to prepare for the most predicted recession, they can actually mitigate a fair amount of the impact of the impending recession. Earnings were down 6 to 7% for the S&P 500 in the first half of this year. Normally, when you see the kind of decline of growth we've seen from last year, from a year and a half ago to this year, that would have been down 10, 15, 20%. And now you're seeing earnings kind of surprisingly, or perhaps not, bouncing in the short term. Our focus is on companies that can weather an environment of slowing economic growth, sticky inflation, and higher interest rates.
Eric, is that big tech? And right now, with the load the boat on big tech, PEs of 20, 30, 40, 50, whatever the number is, what we're doing is we're betting out our comfort out 2 years, 3 years, 5 years. Are we going to get run over doing that?
Well, I think certainly some of the Magnificent Seven, the big cap tech names that have been leading the market, are certainly fully valued. That said, those companies are extraordinary. Most of them are extraordinary in terms of the quality of their operations, the amount of cash they have, their debt levels, which are low and have been termed out. They're actually experiencing an improvement in financial conditions as interest rates rise. So we don't want to ignore those companies, but we need to be sensitive to valuation. Where we're trying to, where we see opportunity is down the cap spectrum, but away from kind of the broad index exposures, say in the Russell 2000, which is a pretty junky benchmark, and finding high quality companies. And the same is true on the fixed income side, where we now like bonds in the 2 to 7 year maturity range, from treasuries to corporates to asset backs.
Eric, this has been a great brief. Thank you so much. Eric Knudsen with years of experience at Neuberger Berman enjoying this bond debacle. On that note, 2's10 spread. Look at that, Lisa. I did not see this number all morning. It was buried. The 2's10 spread, are we beginning to talk about disinversion completely?
You're
OMG.
You're starting to see it in the 5 to 30 year and the 5 to 10 year kind of spread. This sort of disinversion is not what people wanted to see in terms of the predecessor to some sort of economic success.
S&P futures -11, down 0.2%.
Coming up, as we parse through how much to focus internationally versus domestically, I think that's been one of the biggest challenges, Tom, that we've been dealing with all week. How do you parse the human tragedy going on in the Middle East with domestic strength? How do you pair ideas of people looking at what the tea leaves are at a time where there suddenly are even bigger tail risks on either side?
Well, the tail risks were evident last night with a missile attack from Yemen. We talked about that earlier, but to the point of, folks just getting through the day, or far more importantly, getting to Monday, we've got the humanitarian discussion in place. The diplomatic discussion, I think, is in place. We don't have the military discussion in place. That is, and Oliver Crook, I thought, was quite good on this from Tel Aviv. That is the mystery in his Tel Aviv on a Friday afternoon.
And the other mystery, at least for people in the market right now, is oil and where prices go, especially in light of this tension around Iran's fingerprints, and yet no direct accusations, and how much that's really behind the scenes, what could boil over in a more material way.
A hallmark statistic, and Jonathan Farrow's been out front on this, and this is the idea I'm saying, folks, is look beyond the great financial crisis. The United Kingdom, 30-year gilt, pricing out right now back to a summer of 1998. That is absolutely extraordinary. The yield the highest in London since 1998. Coming up, a piercing essay in the Telegraph in London. Former Ambassador to the United Nations, John Bolton, on the Eastern Mediterranean.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. The top names in business are on Bloomberg.
I see a world where financial conditions have gotten tighter, and the transition mechanism, which the Fed would like to see in slowing down the economy, which we all expected, it's taken a lot longer. So the real impact of higher costs around the globe, in the US and Western Europe, it's not been felt yet. And so when people say, well, we're going to have a soft landing, I'm skeptical.
Nobody covers business like Bloomberg. Context changes everything.
I'm going to send to Congress an urgent budget request to fund America's national security needs, to support our critical partners, including Israel and Ukraine. It's a smart investment that's going to pay dividends for American security for generations.
from another generation, perhaps, the President of the United States. Speaking to the nation last evening, we advanced that discussion this morning. Lisa, I thought the conversation with Stevens of Michigan was extraordinary. She is of the President's party, and the balances of a fractious Democratic Party was evident, to say the least.
Both parties are very fractured right now, which raises a question of how much the U.S. has the capacity to get people to agree on some of these key measures that the President was trying to get people to coalesce around last night. And that, I think, is one of the main challenges that he's dealing with, both within his party as well as within the Republican Party.
Anne-Marie Anne-Marie Horton, folks, of Balance of Power, sending me a survey, I believe from Pew or Gallup. I can't remember, to be honest. I'm so sorry. But it really shows the tilt here in the nation, not so much towards a Palestinian temperament, but away from the certitude of an Israeli mood.
It was a Gallup poll, and basically saying that the net sympathy for Israel had gone below 50% among Democrats, and this is sort of what the tension is underpinning some of these debates.
We thank Congresswoman Stevens for a tense interview. Right now, always tense, is Greg Valliere, our chief U.S. policy strategist at AGF Investments. His note in the mornings early is a must-read. Greg, it's not a layup in a fractured Congress. We just heard the gentleman from Ohio speak moments ago. We heard some of the tensions there from the Democrat Stevens of Michigan as well. What will be the process to deliver $100 billion to 3 or 4 projects?
It could take a while, Tom. I mean, I think the case for aid to Israel and Ukraine is self-evident. But apparently that's not a view shared by a lot of people on Capitol Hill. The problem is things are so dysfunctional in the House. Without a House Speaker, it could take weeks before Israel and Ukraine get more assistance. And I think the signal that we'll be sending to our allies and our adversaries is not a very good one.
Howard Baker could get together with Tip O'Neill, just as one example. Is there any ability to get the center tendency to meet in the middle aisle?
I think eventually that will happen. Eventually the center will hold. Mitch McConnell will play a role in this. There are plenty of people in both parties who feel strongly we've got to spend more money on both of these horrible conflicts, but it's going to get dragged out. The next deadline that I look at is November 17th. That's when we got to get a budget. And if they don't get a budget, they're going to have to do another extension, probably past Christmas into late winter. If we have to wait that long for aid to Israel, that's very troubling, in my opinion.
Greg, we're talking about a new level of dysfunction, as some people have pointed out. Anne-Marie was talking about some of the threats that have gotten actually violent to some of the center tendency Republicans who are not voting for Jim Jordan. Is there a precedent for this type of thing?
Well, during the Civil War, there have been very emotional periods in their country's history, Vietnam War, but this is an embarrassment. What's going on in the House is cringe-inducing to see this kind of dysfunction. And I think that, again, our foreign allies and adversaries have to be looking at the U.S. thinking that we're starting to go off the rails.
How much do you think that this is actually one of the drumbeats that has led up to multiple nodes of conflict that are permeating in many places around the world? This idea that there's increasing fracture around the governments, and I'm thinking in the U.S., I'm thinking in Israel, with the Prime Minister being incredibly controversial. I'm thinking about in other places as well.
Yeah, I think that it makes a lot of countries around the world less inclined to wholeheartedly support us, thinking how dependable is the U.S.? Is what we're seeing in the House going to be standard behavior? Again, I think we're going down a very risky path.
Right now, we're actually anticipating something from a meeting between the European Commission and the European Union presidents, as well as President Biden today. How closely are you watching that to understand just how close this connection is, even with some of the disagreements over trade and steel?
I think they'll say all the expected things. I think they'll try to paper over their differences, but I think privately there's going to be a real candor, saying the U.S. has to be concerned about the way that we're perceived right now.
Greg Valliere, we have John Bolton coming up, always controversial. He's been a magnet for debate and controversy in America. And in an essay here, he really centers away from the trauma of Gaza, the immediacy of Gaza, towards a triangulation of Gaza, West Bank, and the northern border of Israel, and alludes to Iran's ring of fire.
Yep.
What is the debate in Washington over what to do about Iran? I don't observe one.
I think it started last weekend. The Wall Street Journal's weekend publication, which is great, it's a must-read, talked about the need for regime change in Iran. You're starting to hear people talk about that. That's very risky. But I think there's a growing feeling that the Iranians are the provocateurs to a certain extent for Hezbollah and for Hamas.
Greg, that didn't work out in Baghdad a few decades ago. I mean, it seems like yesterday for you and me, but we don't prosecute regime change very well, do we?
No, but it's perhaps a lesson not learned. In fact, I would guarantee you, Tom, that in your interview with Bolton, if you ask him about the possibility or the need for regime change, he will advocate it.
I mean, Lisa, to me, this is just absolutely extraordinary. And it's what Ambassador Bolton's doing, whatever anyone's politics is trying to get beyond the shock of the immediacy of Gaza. And that is, what do we reformulate with Iran 3 months from now, 6 months from now, 5 years from now?
Regime change is a bit dramatic at a time when a lot of people are wondering just where the actual people stand. A lot of people have been protesting the Iranian administration. I am curious, though, Greg, from your vantage point, how much oil plays into this and the unwillingness of the U.S. to really go after Iran. We were speaking with Dan Tannenbaum earlier this morning, and he said that's a key measure. It's a key reason why the U.S. hasn't taken a harder line. Is that your view as well?
I think that's a factor. I think another big factor, Lisa, is how fragile support is if the U.S. got even more involved with naval cruisers and a lot more weapons for Israel. I think a lot of U.S. voters, especially young people, are lukewarm at best toward getting involved in this.
So how much did President Biden's speech last night hearken to a different time and speak to a different audience than the mainstream that will be voting in the upcoming election?
You know, Lisa, I just kept thinking one thing. Lyndon Johnson, back in the late 60s, who made a case to confront Vietnam, North Vietnam. It didn't succeed. He failed politically. And we've got another big primary only about a year away, maybe 14 months away, up in New Hampshire. I think if Robert Kennedy does well, if Joe Biden doesn't do well, there's going to be speculation that the war is an albatross for the Democrats and might warrant a look at whether Biden should stay on the ticket.
Greg Valliere, thank you so much. With AGF Investments, my head is spinning. There's just no other way to put it. I mean, what we have seen in the last 2 weeks dovetailed into the financial markets, which I'm going to suggest were already challenged before these military events, these tragic events. It's just amazing on this Friday to wonder where we'll be. I mean, get me to Monday, or how about a week from Friday? Get me to the jobs report on early November.
Bear with me, because I'm thinking in real time, but it seems like we've seen a number of examples of how there has been sea changes in the status quo that we used to understand. U.S. Treasuries as a haven asset this week. That has been something that seems to have been challenged. This idea as the Democratic Party as being stalwart Israel supporters, we've seen that challenged. We've also seen the idea of just some sort of global unity at a time of incredible fractiousness, both internationally as well as domestically. There are all of these basic tenets that are being challenged on a regular basis that were really brought to the fore this week, which is the reason why it's been a particularly confusing soup.
What we have here on the Bloomberg terminal is the market adjustment of this, the market action. Futures deteriorating actually in the last number of minutes. S&P futures down at 20. We have dollar strength, as you would expect, moments away from a 150 Japanese yen, sort of a Pacific Rim measurement there. And I'm sorry, the 2-10 spread, massive disinversion over the week. We are only 17 basis points away from the 2s and the 10s having the same yield. Mirror Pendant, JP Morgan. We do that next.
for the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
The top names in business are on Bloomberg.
The market is starting to look over the Fed's moves into falling interest rates.
We actually think that core inflation is going to fall a little faster than the Fed expects, and that will allow them to start cutting rates by March of next year.
You get a price spiral when labor markets are tight. In manufacturing, labor markets are still very tight right now in the US.
Nobody covers business like Bloomberg. Context changes everything.
Bloomberg surveillance, Lisa Bramwitz and Tom King. John Farrell on assignment. He's getting ready for Austin, Formula One.
Yeah, is that where he's going? I think he's going somewhere else.
He's got the survey. I know he has a Gulfstream this weekend, so maybe he's going to pop down to Austin. We will see. John Farrell in the 9 o'clock hour. Did I hear a rumor that the gentleman from Cambridge will be with John?
Yeah, Mohammed Al-Arian, and maybe,
good to see.
I got to say, on his trip around the world, he's going to struggle to really borrow to finance it. How do you like that segue?
That's very
good. Right now, I just want to say that we are seeing 30-year Treasury yields climb to the highest levels, new post-2007 highs.
U.S. Treasury yields.
Yeah, but elsewhere as well. UK 30-year bond yields to the highest since 1998.
Right. We're back to 07, and I don't know if it's August 07, third week of August, before or after. I'm going to guess it's on that spot. Good morning, David Malpass and the late Alan Meltzer. Or back to 98, Lisa, which August of 1998 was sport, is how I would.
In the United Kingdom.
Well.
Either way, this is really the theme and the drumbeat that we see in markets. Deteriorating tape as people assess both the chance for more borrowing as well as a strong U.S. economy.
There we are. And it's interesting to say the least. We're going to continue here on what you need to do to think Friday into this great bond debacle. But first, Lisa, you demand, you're pounding the Bramo table saying, Herman, get Herman.
Actually, I kind of was. Part of this whole thing, we made this big deal about big bank earnings, and we always do. But this particular earnings season, it's the smaller banks that matter arguably more. And we do get a slew of earnings today. Herman Chan, following them all, senior U.S. regional banks analyst at Bloomberg Intelligence. I just want to start there. We've gotten a slew of bank earnings. We got Comerica, Regions, Huntington. After the bell, we hear from one of the more troubled of the banks, Western Alliance. What are we learning?
It's a mixed picture across the board. There is some optimism that maybe net interest margins have bottomed or will bottom in the fourth quarter, so that's positive as interest rates stabilize, at least on the short end. On the other hand, the banks are still feeling the fallout of higher interest rates and the repercussions of March and April. So repercussions meaning tougher regulations, that is driving less lending across the regional bank space. So you're seeing loan growth decline. You're seeing deposits actually stabilize, which is great to see, but they're paying up for those deposits to stabilize the funding base.
There's a real existential question here that John's been good about highlighting, which is Bank of America truly the Bank of America? Or is this the bank of higher wealth individuals and better capitalized companies to immunize potential risk?
Right.
The banks of America, are they showing the stress that we're hearing about in the Beige Book?
It's interesting because asset quality has been fairly stable. You're seeing some weakness in areas like commercial real estate, and that's starting to pop up, but nothing to really drive loan losses at this point. So that's going to be more of a story for next year and the year after.
That's right where I wanted to go. I've got the S&P Regional Bank Index, the KRE, down 48% from a spiky peak. On a moving average basis, it's almost back to COVID lows. And the question off of Credit Suisse, another regional bank, today, marking down their real estate portfolio 9%. How do these people actually mark down a busted office complex in Topeka?
Right. So there's not a lot of price discovery, as what your question's alluding to. So that's something that the banks are still trying to work through. What they're doing is they're increasing their allowance for the office and other areas that are tougher to sort of figure out at this point. So we're talking about an 8-9% reserve against these office commercial real estate projects. So that's actually a pretty healthy number compared to, and then underwriting's been fairly conservative. So it does seem like the banks are protected against potential losses, but there is still a lot of uncertainty.
The stock chart doesn't look like that.
Right.
I'm sorry. Herman Chan, thank you for the brief this morning. Somehow I think we'll be speaking with Mr. Chan here in the coming months. You know, I'm in triple leveraged all cash. It's just really, really worked out over the last couple. I got a 2-20 payout going, and, I'm the only one. It's brutal.
Well, it's brutal for some people. However, at the same time, there has been strength underlying a lot of this. The fact that we're talking about weakness in the shares of some of these banks, yet resilience in deposits and other issues underscores the challenge right now to understand the bond market moves. And, Mira Pandit over at JP Morgan Asset Management has been covering this, has been discussing this, has been trying to understand the relationship, the new relationship between bonds and stocks. What do you make of the relative resilience in equities this week, to the moves that we're seeing in bond yields, and the weakening that we're seeing around the margins, as Herman was just talking about?
Clearly, 5% yields are a bit of a ceiling for the equity market. We've been waiting to find exactly what that ceiling seems to be, and I think that's where we are with 5% rates. But the challenge is not necessarily where yields are, because growth is still so strong. I mean, 18 months ago, 2 years ago, if I told you in the fall of 2023, policy rates will be above 5%, but economic growth will be tracking above 5%, we wouldn't know what to make of it. And so if you link that stronger economic activity with earnings, and earnings being well supported by that, then what you're seeing is some well supported equity markets for now. The challenge is, as we look forward to next year with 12% earnings growth expected, that's pretty lofty. Maybe we'll see something closer to 6 or 7%. But if the U.S. economy slows, if some of these headwinds that are challenging consumers continue to materialize, that's going to challenge some of those expectations for profits. And that in and of itself could be a bigger challenge for the equity markets going forward.
Are you getting any clarity from the companies that are reporting earnings? Are you getting the sense that they have a vision forward of what their corporate outlooks are going to be next year?
It's mixed. On the one hand, it's been great to forecast a recession for 18 months because it means that companies have had 18 months to prepare from an expense, from a headcount standpoint, to really bolster where they're getting their revenue and really assess their consumer segments. On the other hand, look, we don't know necessarily how next year is going to play out, and I think the bank earnings were very telling. Usually what you'll hear from financial companies is, here's how we're thinking about recession risk. But instead, what we really heard was, here's how we're thinking about the big, meaty, existential macro risks, from geopolitics to federal finances. So it was very interesting to hear them a little bit less focused on what does 2024 do, as opposed to what is the era that we are entering.
What are your clients, high net worth institutions, people with a pot of gold, how are they responding to these bond losses? Are they going to cash? Are they running? Were they buying doubloons? What are they doing?
It's been really challenging to have multiple down years for the bond market. And
3 years down plus is on the Bloomberg Total Return Index.
Absolutely, and I think that people need to reconsider their fixed income allocations.
What are they doing? I want to know, on a Friday morning, are they, the calls you're having, they're swearing at Bob Michael, et cetera, et cetera. What are they actually doing with these bond losses? Writing them out?
Essentially some of that, but I think that a lot of our clients were not positioned heavily in long duration yet. I think a lot of people were waiting for the entry point, deploying selectively. So there's still very much a barbell within fixed income allocations where you still see a lot of short duration. I think people feel okay about the equity market given how well it's done. But in terms of diversification, you're definitely seeing people asking a lot more questions about alternatives and where to supplement some of these outcomes.
How far out is long duration? I mean, you say short duration. I have no idea. Is that 5 years, 7? Is that the belly of the curve? I mean, where is short duration besides LIBOR 3 months?
I think people have been thinking more around the 2-year, maybe 2-3 years, and intermediate is really 5 to 7. People have not really been thinking much about beyond that for the time being.
But we love we're guilty. You and I, you're the worst.
I'm awful.
We're guilty of this because we're quoting a 30-year bond. We're all
and nobody's buying it.
Nobody owns it.
Exactly. Which is like quoting the 100-year Austria piece. Mira, you raised a great point where you said it's telling that some of these corporate executives are coming on and they're talking about macro risks rather than we're a little concerned that we might see a bit of a softer demand in this particular sector of our business, which raises the question, do they just see dynamism as far as the eye can see and they don't necessarily want to get ahead of their skis? Is there kind of a binary outcome where you get bonds underperforming and stocks outperforming? You either have that or you have stocks underperforming and bonds outperforming, and it's one or the other, based on the idea that the only thing that could drive bond yields lower is a true full-blown recession that nobody is looking for right now.
Yeah, I mean, it does seem like a very much a binary outcome at this point, which from an investor standpoint is helpful from how we construct portfolios, thinking about being diversified between stocks and bonds and sort of that yin and yang in terms of how they typically operate. So as much as people are saying diversification is falling apart, I do think the bigger driver of that was we had an inflation spike, we had all of these Fed hikes. As the Fed is very much moving from power to finesse on the rate hiking cycle and really getting towards the finish line, that dynamic is going to be less prevalent in the new year, but it will be a bit of a tug of war. And that's what we're seeing now. Challenge in the bond market, success in the equity market relatively.
How much is the new hedge oil? And I ask this at a time of great geopolitical uncertainty and conflict. There is this feeling that whatever happens, oil prices and oil equities seem to be the big winner of this year. Are you leaning into that?
We are leaning into the energy side of that trade. Certainly what we're seeing from a profit standpoint is that is helping energy companies, and ultimately there are some structural underpinnings of this in terms of underinvestment in terms of some of the capex and the supply factors that we're seeing within the energy space within the U.S. and globally. And I think if we look more broadly as well, I point to what one thing Chair Powell mentioned yesterday, which was, are we headed for an era of more supply shocks? Is this kind of the pandemic aftershock that we're getting over? Or is this a new structural era where supply shocks play in more than demand?
Interesting. I love in your note, you have a single sentence. It's about companies. You're going right back. There's a book none of you have read, Graham Dodd and Cottle, folks. Sold a few copies. We're going right back to securities analysis, aren't we? Like pick a stock.
Absolutely. I mean, look at earnings so far. You've had a small number of banks report, a small number of tech companies report, and some pretty divergent outcomes there. And it's very much what are companies doing specifically to manage their headwinds.
See how she finessed that? Do you see how she just finessed the divergent outcome of banks? You know, being at Fortress Diamond, she just finessed that perfectly.
You're going to try to put her on the spot and make her uncomfortable. Mira, thank you so much. I'm not going to let you have that sort of fall. Mira Pandit, who I really like, and so I don't want you to go there and put her on the spot with something she can't answer or speak to.
Chart of the day, I saw it out on Twitter, and we're not going to get Mira into this because she's going to end up in the diamond timeout chair.
Although it's
but the answer is the singular message of this week of bank earnings is whether they planned it or not, the continued dominance of one bank in America over the next 5 or 6.
There's a bigger trend here, and I think that this is going to be one of the legacies of this period of time, and there's been a bit of research written about this, which is the bigger the company, the more power they have to adjust to inflation and to economies of scale. And in a period of transition, the bigger getting bigger. And I think you're seeing that across industries, and I think that what you see in the earnings is those that have the pricing power are the biggest names that are established and able to go around and trim things here, trim things there, and still produce record
I'll go with the pricing power angle, but I would just say there's a fancy word for this, monopsonistic tendencies, which under stress read a 10-year real rate of 2.5%. The haves are getting havier and the have-nots are not. And frankly, Powell addressed that with David Weston yesterday.
Which raises the question why we haven't seen some more regional bank consolidation. Just to bring this full circle back to Herman Chan, why we haven't seen more consolidation if that is going to create a more diversified, robust financial system.
Bramo teasing up November and into Q4 there with the regional banks. It's been a more difficult tape the last 20 minutes. Futures at -13, S&P futures down 0.3%.
You mentioned that it's been a more difficult tape, but it's come on the heels of bond yields climbing to new post-2007 highs in the U.S. on the longest end. Again, though, this raises this question, who is selling and who is buying, right? I mean, is this something that is mass liquidations, or is this on the margins, the new price setters are not the price-insensitive buyers, of the Bank of Japan and other Japanese investors, and frankly, the People's Bank of China.
Do we get full disinversion by the middle of next week?
We could.
I mean, that's where we're handling it. And folks, there's sort of a, not a belief, but maybe a theory that the stress in the system is not the inversion down, as say Priya Misra talked up. So which bank is she at this week?
JP Morgan.
Oh, I didn't know that. And then, you know, you come up and you disinvert, and the speed of the disinversion here, I've never seen, Lisa.
This is something people are trying to wrap their head around, and it was quite clear to me yesterday that Chair Powell didn't have a clear read on it either. He did talk about the deficit.
Harsh.
No, it's not harsh. It's just reality. I mean, this is a confusing moment. Nobody knows exactly how much of each factor is driving the bond yields rising and how sticky this is. I think that is the core thing, is that, yes, all of these things are factors. Bigger deficit, buyers pulling back, this question around inflation and growth. How much each of them is a factor?
Look at that. You alone disinverted now. We're under 16 basis points on the disinversion of the vanilla 2/10 spread. That's a lot of jargon.
You knew where
there.
Priya was, by the way. You totally do.
The brain fails on a Friday. What am I focused on? How about yen? 149.95. For those of you global important. Coming up, a fiery essay in the Telegraph. John Bolton, former National Security Advisor.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
I think the American people are thirsty for change. I think they are hungry for leadership. And frankly, they know that the White House can't provide it. They know the Senate won't lead. And they are looking for House Republicans to step up and lead and make change on these important issues.
Representative Jim Jordan of Ohio earlier this hour talking about his additional bids for becoming the House Speaker. A fractious time in Washington, D.C., a fractious time geopolitically, a fractious time in markets. And I do just, Tom, want to touch on this idea that there is a real angst setting in about the lack of cohesion in Washington, D.C. at a time of incredible uncertainty geopolitically and fiscally for the United States.
And it's really been emphasized through the show this morning. I mean, in a number of conversations, Greg Valliere, the congresswoman from Michigan, is well. You know, we read it in the headlines, but it's one thing to hear the people inside the Beltway, and the tone of their voices is a little bit different.
It's troubling to come to some sort of resolution and be able to pass some sort of package at a time where the House does not have a speaker. Just quickly, I do want to run you through what's going on in markets, because you are seeing a softening in the tape as you see bond yields climbing. Although off the earlier highs, you are seeing 10-year yields, though, just close to where they closed yesterday, up near 4.99%, 4.97%, just a touch lower this morning. But S&P futures hanging in there, down 0.3%. But Tom, I think that to me is a story only down 0.3% at a time where oil prices are climbing and bond yields are surging to the highest since 2007.
It seems ages ago, but we count it in days, where Team Surveillance said we're going to speak to people with experience. We had a Screaming Eagle of the 101st Airborne with us, I believe, yesterday. We had a Marine of Fallujah with us a few days ago. And now on the political front, we have someone controversial, opinionated. Whether you agree or disagree with John Bolton, read his Telegraph article, which sets up the region and Iran as we look at a fractured Eastern Mediterranean. He's a former United States ambassador to the United Nations, former national security advisor, and a fractious relationship with President Trump. Ambassador Bolton, thank you so much for joining Bloomberg today.
Glad to be with you.
I'm not going to mince words, John. You go back to an internship with a guy named Spiro T. Agnew. You have seen it all. How is this different from 1967 and 1973?
Well, I think in Washington, we really are suffering from an acute lack of leadership, and by a lot of people who forget that they were sent here not to represent themselves, but to represent the country. You know, you remember back in the British Parliament in World War II, when the Labour leader got up after one of Neville Chamberlain's acts of appeasement and said he was there to speak for the Labour leader who was not around. And Leo Amory, a Conservative MP, got up and said, "Speak for England." And what we need people in Washington to be doing is speaking for America, and sadly, they're not.
To look back with 2020 vision, how did we get here within the administration that you served in recently, the Trump administration? Do we have these evil and difficult events because we were off the watch 1 and 3 and 5 years ago?
Yeah, look, I think we have failed to see what's been happening in the Middle East coherently for close to 20 years now. And I think at the root of it, the principal threat to peace and security in the Middle East today, and for some years back, has been Iran. In the current circumstance, they're the ones who have armed and trained and equipped and financed Hamas. They've done the same with Palestinian Islamic Jihad. They've done the same with Hezbollah. They've done the same with the Syrian military. And remember, just yesterday, demonstrating again, they've done it with the Houthi rebels in Yemen. A U.S. destroyer in the Red Sea destroyed several cruise missiles and I think some drones heading north in the Red Sea, probably toward Israel. So the Houthis wouldn't have two rocks to rub together if it weren't for the equipment Iran has given them. Iran is the central factor here, and last night the president's address, which was fine as far as it went, did not address that crucial point. How can you have a strategy if you don't know what the main threat is?
Who's more vulnerable right now, Iran or Israel?
Well, I think at the moment it's Israel, but I think Israel's perfectly equipped to deal with this on their own, and I hope they haven't lost the spirit they once had, which is they will defend themselves. They can do it alone. They can use weapons, but they don't expect anybody else to come and fight their battles for them, nor do they expect to take direction from anybody else either. And I do think there's something to the argument that bear hug that President Biden gave Bibi Netanyahu was not just affection, but an effort to insert himself into Israeli decision-making. Frankly, I'd rather have Netanyahu make the decisions than Biden. If you're faced with a threat like we've seen in Hamas and the deeper threat, the real threat from Iran, you know, you can live with it for a long time until you die from it. And that's why I think the government of Israel, and I think even more than that, perhaps the people of Israel, intend to see the Hamas threat eliminated in the Gaza Strip.
A lot of people are saying that one of the big sticking points for the U.S. going more aggressively after Iran right now is, A, it would cause an even bigger conflagration, and putting that genie back in the bottle is very difficult. B, you have a population in Iran that actually supports the United States and Israel to a large degree and doesn't necessarily agree with the government positions. And number three, oil prices would surge, and that would be a problem for the global economy. How important is that third factor to take into consideration?
Look, I think the concern the White House has for rising oil prices is in the United States. They're worried about November of next year. That's why they signed this atrocious agreement with Maduro in Venezuela to pretend that he's going to have free elections and to allow U.S. sanctions on the export of Venezuelan oil to disappear. I think they're desperate not to have oil prices go up. The easy way, of course, would be to allow more oil production in the United States, but they don't want to do that because if the oil industry here got stronger, it would be harder to dismantle for their green agenda. The real question is, do you want to deal with the threat from Iran, or do you want to pretend that it doesn't exist? The administration has gone out of its way to pretend that it doesn't exist, including its chief Iran negotiator, Rob Malley, having his security clearance suspended in April by the State Department's Diplomatic Security Bureau. The chief negotiator under security investigation. It's just unbelievable.
John, my book of the year is Robert D. Kaplan's The Loom of Time, which stretches from Morocco all the way over to Persia. And the answer here, Ambassador Bolton, is we have to carve out a relationship with friends within the Middle East. How do we prosecute a new strategy with Sunni Saudi Arabia versus Shia Iran, which you consider to be our major threat?
Well, I think the threat is the regime in Iran. I don't have any quarrel with the Iranian people. We've had good relations with them before. And I think one reason that Iran took this opportunity now, and coincidentally the 50th anniversary of the Yom Kippur War, is they were very worried that the strategic closeness between the Gulf Arab states in particular and Israel might be reaching a point where they could no longer affect it. So that this, for them, for Iran, for the mullahs in Tehran, was a critical moment to act. I think things were moving in the right direction. In fact, I think if you ask the Gulf Arabs, they have greater faith in Israel's strategic vision of the region than they do with the United States.
John Bolton, one final question. What is the new isolationism of America? We want to run from this to a great extent. That's what the polling says. There's certain domestic tensions. Are we isolationist as we await for this war?
Not yet, but there are two factors causing it. One is Donald Trump, and I think he's had a pervasive effect, sad to say, in the Republican Party. The second is, for many years, our politicians have not treated our citizens like adults and told them what the threats are that we face in the world. I think if you talk to citizens like they are adults, they'll understand the threat. They'll do what we've always done as Americans and we'll find ways to defend ourselves. If you act like the rest of the world doesn't matter, when suddenly find that it does, it's no wonder people are surprised if their leaders have been negligent.
John Bolton, thank you for joining Bloomberg Surveillance this morning. Ambassador Bolton, a former national security advisor. Lisa, this is just a dose of realpolitik, and as you know, Mr. Bolton is very controversial, but the idea here of Blinken doing shuttle diplomacy, what is our diplomacy? What is our theory right now forward in terms of realpolitik versus a different approach that Bolton